Hello everyone, I'm Rakshith Pai and in this video I'll be talking about one company that has fallen over 50% from its 52-week high. It's a very well-known company. We'll see if it's worth investing. Business introduction. Incorporated in 2005, TV18 is a subsidiary of Network 18, which is a subsidiary of Reliance Industries. Network 18 is the largest regional news network in India, especially the business news. TV18 includes news and media networks such as News 18, Money Control, First Post, CNBC, Forbes India, Colors, History Channel, Better Interiors, Better Photography. Basically, they got everything under one roof. The company has 16 channels in 15 languages with over 60 crores of unique viewers. Fundamental analysis. The media industry is a dynamic business where those with constant innovation grasp the market. The competition from the peers is extremely high. TV18 has done a tremendous job in regards to diversifying its media portfolio. Thus, the company went on to become one of the India's largest network with over 5,500 crores in revenue and with an operating margin in double digits. The company also has a comfortable cash position with no long-term debt obligations and some amount of short-term debts. Also, since Reliance Industries is the parent company of TV18, we can expect any and all kinds of financial support from Reliance. TV18 has shown a very good improvements in profitability, especially post financial year 2021. The company is also venturing into many other businesses, which includes OTT platforms such as SWOT and the merger of sister concerns. Financially speaking, TV18 has low debt and good cash flow. If they manage to grasp a bigger audience, this company will be one of your finest investment. And as of now, I most certainly consider the company as undervalued. Technical analysis. TV18 broadcast is trading lower than both 50-day and 200-day moving averages. The stock took a big hit on the last week of April 2022, just after Reliance Industries and Viacom 18 announced a strategic partnership with Bodhi Systems. The worries are mainly regarding equity dilution, and since then the stock price has dropped over 50%. The current trend suggests that stock will not fall any further. With a stop loss of 32 per share, we can expect the company share price to have a trend reversal soon. SWOT risk analysis. Opportunity and strength. Number 1, strong promoter backing. TV18 is the subsidiary of Network 18, which is owned by Reliance Industries. Reliance Industries has shown full support in terms of reviving the company, so we can expect more from Reliance. Number 2, diversified portfolio. As said earlier, Network 18 Group has both general and business news channels. They have entertainment, both regional and international, infotainment with websites, as well as content asset monetization businesses. Basically, a very well diversified business portfolio. Number 3, market leader. Network 18 is also a market leader in many sub-segments of Indian television industry. They are also one of the largest media house in India. One way or the other, each and every Indian will be at the consumer end of Network 18. Such is their presence. Weakness and threats. Number 1, short-term debt. TV18 has more short-term debts. If the company is unable to generate steady cash flow, then such debt will not only affect its operation but also its future ability to raise capital. Number 2, need investment. Although TV18 has shown improvements in its profitability, the company still needs a lot of investments and innovation to grasp a bigger share in the market. With the help of Reliance Industries, the company is investing in a lot of other entities, and fruitfulness of such investment is yet to be seen. Number 3, vulnerable to economic slowdown. A major part of media house revenue comes from its advertisement, and we know for a fact that at times of economic slowdown and at times of recession, each and every one will cut down on their spending. This applies for advertisement spending too. Thus, in case of an economic slowdown, the company's revenue will take a hit. Conclusion: TV18 is the fastest growing network in India. With over 140 crore population, the consumer end of media is extremely strong. If the company is able to merge all its entities and focus on one major organization, that is Network 18, then it will for sure will take over the market. Right now the media industry is unorganized, and even some of the organized players have internal issues. It is the right time for Network 18 to take over. Although business growth may be slow, the media industry is a competitive one and with a lot of entry barriers. So established players will grow bigger, and TV18 is one such established entity. TV18 is a long-term investment. Once it merges into Network 18, I hope to see some better improvements. Until then, keep observing the stock. I have invested in the company with 1% of my portfolio weightage. As per the current valuation and considering other factors, I'll give it 8 out of 10 ratings. Thank you for watching.